Thank you, Mia. Good morning, everyone. Good to see you, Jim. Ladies and gentlemen, esteemed colleagues and experts of our industry, on behalf of Standard Chartered Bank, it's a pleasure to welcome you all to Marine Money London, the first marquee maritime event of 2025. A year that stands at the crossroads for the global shipping market, poised yet again between opportunity and uncertainty. The sea remains vast, the horizons tempting, but the undercurrents are shifting, and we must navigate them with a sharper compass than ever before. The shipping industry, often hailed as the lifeblood of the global trade, continues to exhibit its enduring resilience and remarkable profitability, with the Clarksea Index averaging strong levels of $29,000 per day between 2021 and 2024, which is 50% higher than historical averages. With demand versus supply fundamentals this year in 2025 finally balanced at about 2.2% versus 3.4% respectively, the market is hopefully poised to experience continued profitability, or as we say, more of the same as per the first part of our conference today you're here for. However, beneath this veneer of stability lies a complex interplay of forces that demand our acute attention, which is the second part of today's theme, with caution. Something we all need to be doing, especially in three key areas as per me. And I would say they're 101 of shipping since I entered this 30 years ago. Firstly, caution with respect to shipping demand. Clarkson's estimates that the Red Sea Index disruption has boosted global vessel demand by approximately 2.4% for the industry on the whole, and even more significantly for the containers and car carriers at 11% and 7% respectively. So a full resumption of the normal Suez Canal traffic flows would very quickly unravel the strength in today's markets, with global demand measured in ton miles actually turning almost negative in 2025 should this event happen. Shipping demand also obviously correlates with the global economic outlook, and we will shortly after my speech be welcoming my colleague Madhur, who is the global economist for Standard Chartered Bank based in the UK, covering this with a very apt theme of reverberations. Adding to the intricate demand equation is the seismic geopolitical shift brought by the US presidential transition at the start of this week, as we know, which has already begun to send ripples through the global trade policies. New tariff sanctions and emboldened protectionist rhetoric has resurfaced with renewed vigor, and I look forward to what the experts have to say in the upcoming panel on this today. Secondly, very basic, caution with respect to shipping supply. The order book as a percentage of fleet stands at 15% today, the highest in almost a decade, driven particularly by the LNG and the container shipping sector at 50% approximately and 27%. One of the world's leading ship owners based in Singapore was having a coffee with me, and he said, Abhishek, do you know that today approximately $270 million is the cost of building an LNG ship? You're a finance guy, breaking even and financially, you need about 100,000 US dollars, give or take 5-10%, over a period of 28 to 30 years. Do you think this investment makes sense, especially when the markets are hovering around 20 to 22K per day? I don't have the answer, and I'm looking to unravel it this today. Hopefully somebody will take it up. Finally, the third and last point that I want to caution you is on uncertainty, which is synonymous with shipping. Adam Kent, my friend from MSI, put up a very beautiful slide. I don't know whether he knew that I was a fan of that slide in September, Marine Money Singapore, which talked about a spike in the global trends of black swan events that had record highs since 2019. My credit officer was in the same room. He asked me what my view was, and we went back to the CEOs and CFOs, asking them on their strategies to deal with this uncertainty. The sage advice was consistent. When predictability decreases, balance sheet increases. This makes a lot of sense. However, the next layer to this is that if all shipping companies start building buffers in their balance sheet, this could have an unintended consequence of filtering through into a weaker economies as companies sit on cash rather than plowing it back. This is something that we have seen in play out at the sovereign stage very well in Asia recently, with higher savings in some markets equaling a weaker economy. This conundrum underscores the importance of this platform, Marine Money, which provides a forum for us to debate best practices, discuss the returns as and when, charters new waters to continuously improve this industry and make it future-proof. The final piece of puzzle is still sustainability, notably as the World Economic Forum's latest risk report identifies the climate-related extreme weather events as the primary long-term threat to the global supply chain and global economy. Standard Chartered is proud to be a part of Poseidon Principles' steering committee, and we see decarbonization efforts gradually being priced into the financial markets as stakeholders increasingly consider climate alignments for not only their companies, but also their assets. We are pleased that so many of our clients have set out credible transition plans with ambitious targets, and we look forward to working with them to collectively achieve our net zero goals. But as we know, turning a fully laden ship ain't that easy. This can only be achieved through thoughtful and collaborative progress on this front. To summarize, we find ourselves at a critical juncture today. The shipping industry must not be lulled into complacency by the momentum of previous years. Instead, we must embrace 2025 with a sense of cautious optimism, armed with the strategies that prioritize flexibility, risk mitigation, and also adaptability. As we steer our vessels into uncharted waters, the call for decisive leadership, innovative thinking, and collective vigilance has never been louder. This is our moment to rise above the challenges, to anticipate the unthinkable, and chart a course that not only withstands the shifting tides, but also sets the stage for a prosperous and sustainable future. As we move forward, let us embrace today's theme of resilience and caution. I look forward to solutions we will uncover here today. Thank you and welcome once again. Let us steer ahead with eyes wide open, ready to adapt whatever the tides bring for us. Thank you once again and have a good day.